big businesses don't have to worry that their whole accounting department has gone on holidays at the same time. But small businesses have to worry about this all the time, right? And we think there's a better way.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, welcome to another edition of Ask Spurrell CPA. Today we're talking about two-person teams for all clients. I have Trevor here with me from Inspired Method Marketing again. Trevor, we saw some interesting stuff yesterday that's coming up on the YouTube channel. Hey?
We sure did. You guys got to stay tuned because it's going to be pretty fun and amazing.
Yeah, we got Raptor time coming up. So the quote that we have here today, we're talking about two-person teams for all clients in accounting firms. And it's Jim Collins, author of 6 business books. And he says, great vision without great people is irrelevant. And the statistic that we're committed to eradicating here is 50% of all Canadian small businesses go out of business within 5 years, and that's our goal, is try to increase those odds for Canadian small business owners. And at Spurrell and Associates, we've been trying to build an accounting firm that gives small businesses the same advantages that big businesses have. So Trevor, what are the questions that you think the average small business owner should be asking?
Well, I think the first question would be, how many technicians are assigned to small business projects at other firms?
In most firms, you have one technician, so a project gets assigned out, and it gets assigned out to what they call accounting technician.
Okay.
And that's usually how they go about it. So one project, one year end, one tax return, it gets assigned out to one technician.
Okay, so do these firms normally have a manager or a partner that reviews the projects?
Yeah, that's usually the process. So it usually goes from technician, and then it goes to either a manager or partner after, and that manager or partner is going to review that project, and hopefully make it a little bit better, correct any errors, maybe implement a little bit of a different strategy, but usually goes from technician to manager and or partner.
Okay. So then, do you call your frontline staff accounting technicians?
I don't call them accounting technicians. I call them associates, and the reason why I call them associates is I believe they're kind of the partners on the project. Without them, they're not just a technician. I want to give them a bigger sense of ownership over that project, and where the sign out in the front door says Spurrell and Associates, they are the associates. Without them, the meeting that you have with Spurrell doesn't actually happen. There would be no way I would ever get all that work out the door. Right. I want to give them ownership over that project, to increase their diligence on it, so they know it's a project that they're taking ownership on as well.
Okay, so how many associates do you assign to each client?
Yeah, so we always assign every client to 2 associates. So rather than assigning a project to 1 associate, we assign a client to a team of 2. And that gives a little bit of redundancy in place. So when the client knows where they're going, type of thing. So.
Okay. Now, do you try whenever possible to keep the client assigned to the same 2 people?
Yeah, that's the idea. We want to give them some consistency. So, big businesses, they have big accounting teams, and there's always that consistency. One person goes, the other person is still there. But, small businesses, they're going from technician to technician, from firm to firm. And so we assign them to a team of 2. And that team of 2 can, get some knowledge about how this business owner is going to progress through their year and over multiple years, and how they're going to progress from the planning process to the year-end process to, redoing the plan again to, looking at decisions that come up throughout the year. We're assigning them to that team of 2 to give them that consistency and that groupthink that big businesses have. We're trying to recreate that advantage for small businesses.
All right, Josh. So how does this help when staff take time off or when there's staff turnover?
Yeah, so when you have, anytime you hire employees, you're going to have time off. People are going to go on vacations. Occasionally, people get sick, and you're going to have turnover. That's just part of the nature of the game. But if you have one client and the project is assigned to one technician, now all of a sudden nobody knows what's going on in the file if you just assign it to one. So we learned that if you can assign a client to a team of 2, someone is always familiar with that client and their circumstances and what's going on in their business. And even if we have turnover, we still always have that one person left. If someone goes on vacation, that client has a critical issue that they need to be resolved. They know that one of their team members is still there. They're still working. And we even schedule our vacations around that, so we make sure that people from the same team aren't going out of the office at the same time, because we want to give that continuity and have it available for the clients. And every client, they get big or small, they get their own team. They get their own dedicated team that they're assigned to, and they know they can pick up the phone, they can call them, they know exactly who their frontline staff is. They don't have to wait to try to bounce a question off a partner or a manager who's consistently tied up in meetings. They get that quick response time.
That makes a lot of sense.
Yeah,
makes a lot of sense. So now, do projects get reviewed by a manager once completed by the associates?
Yeah, we're still the conventional model in that way. So the unconventional thing is we assign every client to a team of 2, and that's a little bit different as opposed to assigning every project to one technician at a time. So we assign the client to a team of 2 associates, and they're taking ownership basically of the client and all of the projects that client is going to have on an ongoing basis. And then we still have the managers and myself, we're still reviewing the files after the fact, but we're reviewing the files knowing that this team prepared these files,
right,
as opposed to this person worked on this project itself. So we know there's that team. That's still the way to increase the quality control and have a system that's not too expensive. You don't want your highest level accountants doing
right,
the heavy lifting type of thing, the most expensive people doing the heavy lifting. You want to make sure that the less expensive staff are doing the time intensive tasks, and that keeps the the price points at that are affordable for the average small business owner, because we want to give them the best possible service, but we want to give them the best possible service that they can actually afford, not a service that's unattainable, because then we get into the same scenario where only big businesses can have it. And our whole goal is to give the average small business the same advantages that these big businesses have. Big businesses don't have to worry that their whole accounting department has gone on holidays at the same time. But small businesses have to worry about this all the time, right? And we think there's a better way.
All right, so how does having 2 associates assigned prior to review increase quality?
Yeah, so I've learned this over time, that as smart as I like to think I am, I'm not. And the group is always smarter than any one person. There's no way that any one person can have the same knowledge as 2. So you get assigned to a team of 2, and so when that one person who is working on a year-end or a financial plan or a business plan for a client, they have someone to bounce ideas off of. They have someone to ask, hey, I don't know how to handle this. Have you ever run into this? And it is really clear who is going to help with that. So even before the project actually gets to manager or myself, we've had more eyeballs on the project. We have a better work product.
Right.
We've thrown more expertise and more experience at the project, before it even gets to the manager review level. Because, if one associate doesn't know the answer, likely the other one does know the answer. And they might know something that even the manager who's going to review it doesn't know. So, we're just giving, a bigger section of expertise on every project.
Right. All right, Josh, so how are your workstations set up to facilitate how the clients are assigned?
Yeah, so you can see behind us, these workstations, we have these all over the office. They're not just sitting here where we do the videos. These are the actual workstations where all of our work gets done. And we have 5 of these group workstations in the office. And we'll have one team member sit on the far left, and we'll have another team member sit on the right. And each team member has 3 monitors at their disposal. So they're controlling the monitors in a vertical array. one team member here, one team member here, and we have the empty workstation in the middle. So we went with the 3 monitors just because of the nature of accounting work. We kind of talked about that once before, where you have a source document, you're making an entry on another screen, you have a report on another screen. So you always have source document, entry screen, and report screen, and that's usually how you're working, regardless of what accounting program you're working in. That's just the workflow of an accountant's life. So they have the 3 monitors at their disposal in vertical array. But the way these are designed, these are actual 4K computer monitors. So you can actually read the information on these screens when you're sitting at a bit of an angle. So if you're sitting on the left side, you can actually see the information on the right side. So that allows the team members to actually collaborate. They can bounce ideas off each other, super efficient, and with other workstations, you're trying to peer over someone's shoulder. They're just trying to tell you the information verbally, or they write a memo, and then the memo gets read later on, and it's just super inefficient, and that collaboration just takes an inordinate amount of time. We're able to collaborate, extremely efficiently. And then going one step beyond, we have the empty workstation in the middle that myself or the other CPA and other manager, we can jump in there, and we can do the review process as well too. And sometimes we can even do a live review where we go through directly with them to reduce the amount of time, and we're not looking for a fact that they know readily. And imagine it's just a giant board of information that we can put up there. Between 3 people, we can put 9 things up on the screen at any one time and figure out a very complex problem, and kind of utilize those 3 minds all at once. So the workstations are really set up to just maximize the value of that collaborative value on every client and every project.
All right, Josh. So why do you have the associates participate in the meetings?
That's a unique one. A lot of accounting firms, you'll be years before you ever see the inside of a client meeting, and I just think that it doesn't provide you enough learning. So even I'll have associates participate in meetings in 1 month on the job. I will start having them participate in meetings, and I actually just think they learn. So even though they're not at that high level first when they first start out, they start to understand what's important in a meeting.
Okay.
And a lot of times it's not about being right and wrong. Sometimes you just have to have the information organized in such a way that you can explain it to a non-accountant. And that's a little bit difficult one to, sometimes you'll get a new accountant and they'll ask them to redo something and they wonder why you redo it because you're getting to the exact same answer. It's not always the goal of getting to the right answer. It's getting to the right answer and being able to show your work in such a way that a non-accountant can understand why you're doing that and why they should adopt a strategy and why that matters to them. They also start to get an interpretation of what matters to the clients, what's important to the clients, what's not important to the clients. What makes a high-level CPA is they start focusing on the things that matter. It's again, it's not always about being right and wrong. It's about focusing on the things that are actually material.
Yeah.
If it's not material, who cares? And if the client doesn't care about something that's immaterial, who cares? But we better be bang on the things that matter to them, and not just be right on the things that matter to them quantitatively, but have analysis that's going to help them with the issues that matter as well. So if you can integrate the associates into that client meeting process, they start to understand what it takes to actually add value to the client as opposed to just finishing a tax return.
Right.
And that's why we involve the associates in the meetings. So I think that's what we have here today on this topic. Thanks so much for joining us again. As always, please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And we'll look forward to any comments that you have below, and we'll certainly respond and use your feedback to develop the content for future videos. Thanks very much.